Gold futures touched a nearly 4-week high Wednesday, but trading is described as cautious ahead of the Federal Reserve minutes. Joining us to talk gold in 2017 is Peter Hug, Global Trading Director for Kitco Metals. Pete, welcome back. Happy New Year. Good to see you again.
Happy New Year. Good to be here.
So you're our first interview of the new year, Pete, and just to sum up 2016, it was a pretty tough year for gold. It was up against some major headwinds, strong dollar, rallying equities, yet it still managed to outperform. So how are you gauging the metal's performance the first trading week of the new year?
Well, we saw some lift at the end of last year. We were calling for a modest rally coming into year end. We got the rally. Unfortunately, it came from fairly suppressed levels. The momentum through December 31st has continued into the new year, with gold, moving up an additional $15 since December 31st. So, we're starting to see some buying interest here. Again, very muted though. Most of the buying interest we're seeing is coming out of the Far East. To some extent, there is some more demand in India, but the Chinese New Year upon us, there's been some buying, especially in gold in the Far East. Not so much silver, but gold seems to be the most popular investment in China. Our Hong Kong sales are up ahead of last year's at this time, albeit we've only had four trading days. But there does seem to be increased demand from the Chinese, and again, I probably put that to the Chinese New Year just around the corner.
Right. But how long, could that reaction last? Do you think it's just a temporary bounce, Pete?
I'd like to see gold. I mentioned a couple of days back that I thought gold had the potential to get to 1165. It got there yesterday. It bounced, closed down below 1160. This morning, again, has tested it a number of times. We've bounced off 1165 a few times today. If we can get through 1165, I think there's a shot, an immediate shot to 1174. But if we clear that, which I don't think will be a major hurdle, I think 1192 is in the cards in the short term. If it retreats from 1165, I think it's possible that we may test back into the 1140, 40-ish, 42 range over the next week.
All right, Pete. Finally, silver. It's having a strong start here. Do you think its industrial component is really helping it out, since many are counting on big spending with Trump's infrastructure plan?
Yeah, I think so. And I mean, some of the Chinese data recently has been very upbeat. And so from an industrial perspective, I think silver will outperform gold in 2017. So I'm not saying that they're both going to go higher, but I think silver will be a better performer than gold. The ratio at the end of the year was again around 72 ounces of silver to an ounce of gold. And every time that ratio has been around 72, it's been a good time to buy silver, sell gold. So that seems to be playing out as well coming into 2017. We've got the ratio back under 71 as we speak. And it's also benefiting from strength in some of the other industrial metals, such as platinum and palladium. Platinum's up some 8% since the end of the year. And palladium is up 8% since the end of the year, and platinum's up approximately 6% in the same time frame. So we are starting to see some demand in the industrial side as people speculate that Trump's initiatives in 2017 may prove beneficial for growth in the industrial complex.
Yeah, you're not the first telling me that the PGMs might just be the ones to watch. Pete, thanks so much for joining us.
You're welcome.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.